Howdy there, folks. Welcome into this reaction video here today. Two for me to react to. It's buy one, get one free. First one up here, Tom Lee, everybody's favorite bull, Tom Lee. We're going to listen to what he has to say about where he sees the stock market going and what he thinks is going to happen for stocks. Hey, spoiler alert, I'm going to go on a limb and say Tom Lee might be bullish, okay, and might be saying stocks are going to go up a lot, okay? And then we're going to go ahead and react to this one. Cathie Wood out with a new interview here on Bloomberg. You know, the one from last week, oh boy, okay? That one I actually shut it off partially through the interview. So I'm hoping this one goes better. I'm hoping to keep my cool this time and not get too frustrated. I mean, it's a beautiful morning. Absolutely gorgeous out here in Vegas today. It's probably 79, 80 degrees right now. Got my Tesla glass. You know, if Cathie Wood makes me angry in this video, then she's going to make me angry on any video, okay? So I'm going to try to keep my cool in this one. I appreciate y'all joining me as always. If you're trying to join my private group, by the way, that will be pinned comment down there to apply to join us in there.
Advisors, Tom, I'd love to have you on. You've got a bold perspective that you always bring. How much higher can the S&P go throughout the year now that we got this debt ceiling issue mostly taken care of? What is the catalyst to move up?
John, I know it's a key question because the stock market's up about 10% right at the midpoint, and everyone's asking the exact same question. You know, is this a good time to put money to work? Can I make money in the next 6 months? I think there are some reasons for stocks to actually advance probably another 10% at least into year end to get towards the old highs.
All right, so his prediction is market goes up, S&P 500 specifically goes up at least 10% into year end. Now, if you're talking about S&P 500 up 10% plus, right, then you can assume the NASDAQ will probably be up even more because usually the NASDAQ's going to do even better than the S&P 500 on the upside and worse than the S&P 500 on the other side, right, which would obviously be pretty substantial.
First, I do think inflationary pressures, even though it's a mixed picture, are really in a sustained path downward. We're getting sort of like fluky data, but you know, this week the used car data really pointed to inflation cooling. You know, that's a huge weight in the CPI.
Right, and Advanced Auto Parts suggested that as well, right? And Home Depot as well, when you got, you know, the auto part prices and the lumber prices kind of hitting them in a way.
That's exactly right. And even if this is not showing up in CPI yet, all of the commentary from the CEOs and even the Beige Book support that picture of like future inflationary pressures are diminishing. Now that's important because that means the Fed doesn't have to hit the market as hard as it did last year. I mean, that's what made last year so tough. But now we got a Fed that's slightly less hawkish. Now they have to worry about regional banks, so there's a temporary put there. And then we have to layer in the fact that there's a lot of cash on the sidelines, and I think a lot of guests today talked about that. There is an enormous amount of cash that's unallocated. Part of it is the debt ceiling. Part of it was people waiting for the Fed. But we know as a percentage of market cap, we're almost back to .com levels. So at the nadir.
But Tom, why shouldn't I believe that the optimism that you're expressing now about why the market could move 10% higher is the reason why the market is up 10% so far already? And that cash on the sidelines, cash does a lot more on the sidelines than it used to. So why should we assume that the market deserves it?
That's a great question, John.
Fair.
Like, you know, how much is discounted? Just like last year was a 27% decline, discounting a lot of the hiccups in earnings now. Fundamental investors are going to start to become a little more constructive because when you look at earnings revisions, they have bottomed, not just tech only, but rest of the market. And when we look at things like technicals, such as, you know, price to 20-day or price to 200-day, more stocks are beginning to participate. So even though breadth hasn't been great, I think there's now a chance for investors to say there's a catch-up trade coming. Now that could come from the autos or it could come from the financials or discretionary industrials. I can't tell you it's decisive yet, but that's really why I think FANG has led. They were the first to peak, first to bottom, now really leading year to date, up nearly 50%. I think the second half is a story of a lot of other sectors catching a bid.
Well, is it?
Yeah, so my 2 cents on that. If you're talking about us taking the next bull leg higher in this market, right? What I think you're going to want to look for next is Russell stocks. Those ones have lagged for, honestly, years, not months, years. And there's a lot of reasons for that. Obviously, Rona messed everything up, right? Then supply chains got messed up. That hurt a lot of those Russell companies more. Recently, obviously, that regional banking situation hurt the Russell in a substantial way because in the Russell, there was a lot of regional banks that were big weights in there. So if you're talking about the next leg higher in the market, it's going to come from, in my opinion, like the Russell area, if we're going to get that next leg higher. So that's just kind of my 2 cents there. And you'll see it in some other stocks that have kind of been beaten down. I mean, something that comes to mind could even actually be some of the energy plays, maybe in the back half of the year.
Because remember that N in FANG stands for Netflix, not Nvidia. And Nvidia has just been an amazing mover this year. I mean, I don't even know how much. I stopped counting really at 150%. It's up it's up a lot. And right. AI has been a big mover in general. So is it the big stocks have continued to do well, Apple, Microsoft, et cetera, but this AI trade has been crazy. Might that argue that there's enough enthusiasm in the market already and there might not be that much more?
Yeah, well, it's a great question, but keep in mind, Nvidia wasn't even heavily shorted into their earnings print, and they revised forecasts really by 30%, and that's the stock move. AI is something the Fed would like to see continue to actually expand because that contains inflationary pressure. It's like, if you think about the Fed being hawkish and what they're worried about, they're not really worried about AI growing because AI takes away inflation pressures. I almost think that the Fed doesn't mind that FANG stocks are rising. I think stocks like Netflix and even Amazon, which have been sort of the tail end of the FANG, are also the parts of the FANG that could really start to power a bigger move in tech and discretionary. I mean, I think they're starting to look like even Tesla, like they're beginning to participate. And again, that would strengthen and add breadth to the market.
Yeah, the tough thing for the bear case right now, before we get into this Cathie Wood video here, tough thing for the bear, and I thought these were the same person when I first looked at the outfits, man, too similar. The tough thing for the bear case, to be quite frank, is many of the biggest weighting stocks, right, specifically in the SP 500 and the NASDAQ, right, are Nvidia, Amazon, Meta, stocks like that, right? And those stocks, you're going to see their net income skyrocket on a year-over-year basis throughout the next several quarters. So that's a little tough. Apple's in, I think, an iffy place. Microsoft continues to put up great numbers. Yeah, the valuation's a little rich, but that's Microsoft at the end of the day. And so that's a tough thing, in my opinion, for the bear case to really get the indexes to drop huge, specifically S&P 500 and the NASDAQ. You don't have a lot going for you. Next year could be a different scenario or a year after that, but for the next several quarters, it's going to be a tough play, in my opinion, for when you're going to have those big dogs like having their net income skyrocket. I mean, you're going to see those companies, 50%, 70%, 100%, if not over 100% rise in net income EPS on a year-over-year basis in these future quarters. It's going to be shocking.
And sell your stocks, in this case, Nvidia, you had it on very, very early, and I don't think you missed out on it. So can you share your thoughts around this?
Rebecca, I want to thank you so much for setting the record straight. You and Eric Balchunas as well know that we've owned Nvidia since inception. Some of our funds still own it. Our ARKQ fund and ARKW. In ARKQ, it's number 7. In Japan, we have 3 funds that own it. We have our Metaverse fund, our Mobility as a Service fund, and our Global Digitalization fund. So they still own it, and as you know,
if you're not caught up on this story, essentially, Cathie Wood and ARK sold Nvidia in their main fund before it went on this kind of epic recent run here, right? And so she's having to kind of answer questions about like why would you do that? Obviously, when the stock was just about to go on this epic run, so.
ETFs, we have taken profits. This stock has gone from $5 when we first bought it to $400. There's a lot of good news discounted in this stock, and we still think it will do well over time. However, there's a new group of stocks that are going to benefit from the foundation that Nvidia has laid. Nvidia is a hardware stock, and sure, it has some software, but the history history of hardware and software is the bigger beneficiary over time is going to be software. And in our...
I mean, looking at this chart, guys, okay? Looking at this chart, my gosh, you know, I think this is just another great chart to see why it makes sense. Like, if you own a great stock, buy and hold, okay? At the end of the day, they had crazy amounts of Nvidia shares, right? And, you know, they just missed out on incredible gains over the years. That, for what? You know what I mean? For what? Like, they should have just held through. And so that's one of those things you look at there, and it's just like, dang, man, you know, you own a great company, just hold through, call it a day. You don't have to trade in and out of it. If the fundamentals massively change for the company and it's all worse, that's a whole different scenario. But at the end of the day, look at the sort of shares they had at one point. My gosh, you know, the benefit from just that one stock is immense.
For every dollar of hardware that Nvidia sells, software providers...
I guarantee you they wish they still had every single share of Nvidia. Like, you know what I mean? Like, gosh.
Providers will generate $8 in revenue. So we are looking to the software providers who are actually right now where Nvidia was when we first bought it. So Nvidia was in the $5 to $10 billion range. Now it's $1 trillion, as you said. But we have software opportunities out there like UiPath in the robotics process automation space, Twilio. In the genomic space, we have Exact Sciences, Teladoc. We have companies that are, because of artificial intelligence, they are going to develop new businesses that we think are going to thrive. And right now, they are in that $10 to $12 billion range that was in place when we first bought Nvidia. So we are really happy that, you know, investors who own benchmarks like the NASDAQ and QQQ still own Nvidia. They own it in some of our portfolios, but we're on to the next thing.
So I think as one of the leaders in the AI space, a lot of people look to you to see where the future is going in terms of where we see AI going in the next 5, 10, 20 years. In our research, we predicted that AI ETFs would reach roughly 35 billion, correct, in 2030. Do you have any thoughts around this? We currently have roughly 70 ETFs that have artificial intelligence, AI, robotics in it, but where do you see the market going?
Well, we think this is a very large market, and we believe right now the hardware side of it is probably in the $30-40 billion range. So multiply that by 8, we see the software side going to 8 times that. But over the next, between now and 2030, we think artificial intelligence is going to add more value than any of our other technology platforms. In fact, it's going to catalyze them. We talk about Tesla all the time. It actually is the biggest artificial intelligence play, we believe, right now in our portfolios. It is the largest position in our flagship portfolio, ARKK. Why is this? Because autonomous taxi platforms, we believe globally, will deliver by 2030, $8 to $10 trillion in revenue from almost zero right now. Think about that. $8 to $10 trillion in revenue is almost half of the size of the U.S. economy. We think that's a global autonomous taxi platform opportunity, and we think it's going to submit to natural geographic monopolies. Tesla certainly in the United States and perhaps elsewhere. So you're going to be surprised at seeing who's going to, many people think it's just hardware and software stocks widely advertised, but Tesla, many people think is an auto stock. We don't. We think it's much more than that, but we think it's one of the biggest AI opportunities out there.
And you don't think...
Yeah, I mean, for now, Tesla's viewed as an auto stock because, let's be honest, where's all the revenue come from? It comes from selling cars, right? I think over time it can get more respect. But in terms of the autonomous taxi network opportunity, like they got to do it. They got to actually do it, right? And they got to put the numbers up before you can really get that then kind of more mainstream respect out there. And I don't even put a lot of faith into the autonomous taxi network opportunity yet. I don't have it in any of my numbers in any substantial way over the next few years. It's one of those things that's exciting. I think it's eventually coming, and it has potential to be big for Tesla. But I think there's two main questions. What year does it come? That's a big question. And the second part is, how profitable will it really be? A lot of people are convinced it's going to be so profitable for Tesla right from the jump. I'm just not so sure about that. I think it's definitely could be a very profitable business over time, but I just don't, a lot of times when you launch a big new business like that, it actually eats into your profitability in a pretty substantial way, and I wouldn't be surprised if that happens for Tesla as well.
Valuation for Tesla is too high right now. What would prompt you to sell?
Well, right now, and we're in print on this, Tesla's at roughly $200. We believe that in 5 years, 2027, it will be a $2,000 stock if our research is correct. Importantly, autonomous technology takes it there. If we're not right on autonomous, we still think that Tesla meets our 15% compound annual rate of return hurdle requirement, which means it would be at least a $400 stock just because of the massive shift towards electric vehicles during the next 5 years.
Of course, we know.
So that's pretty attractive. I mean, and I appreciate her comments there because, I like I said, I don't want to put too much faith in the autonomous taxi network, and when they do get that launch, how many markets is it in, and how many people are signed up for it, how many people are utilizing it, and there's so many questions there, and so you can't put too much faith into that right now. But I do like that she can extrapolate that, right? Take that out and say, well, if we're not really right on that, this is still a $400 stock in 5 years, roughly 4 or 5 years, and so I do appreciate that, and I'll be honest, yeah, she's probably pretty accurate with that. The way I see net income going for Tesla over the next few years, I don't think, even, without the autonomous taxi network, I don't see there being a way where Tesla's not, kind of in that $400 range, if not over that in a few years from now, regardless of autonomous taxi network.
Elon Musk has been meeting with the top leadership in China. What do you make of that visit, and how important is this market?
Well, Elon has always said he has been so impressed by the political leaders in China. He goes into the cities, and the mayors of cities very often are engineers, and they know exactly what he's talking about. So I think he thinks China is very fertile ground to become an exporter of Tesla vehicles, as it already is. So that's very high-end exports, which China wants. Of course, it wants EVs to proliferate in China, but it's got its flagship BYD and many other companies. The other reason I think Elon is there is maybe it's a little bit of a peace mission, because as I believe, as my friend and mentor Art Lefebvre believes, and as I think Elon believes, we're all better if we are communicating and sharing technologies and making one another's economies even better than they are now. So I think it's a little bit of that peace mission as well.
So I think if we look at what's happened since Nvidia announced, from an ETF perspective, we've seen billions of dollars of worth of inflows into whether that's semiconductor, tech funds, artificial intelligence. Everyone's piling in at the moment. In terms of how AI ETFs are, we found that there's really two types. The first type are ETFs that track AI companies, so the likes of your funds. But then there's also ETFs that utilize AI in terms of a quant strategy. It's a robo strategy. The fund will utilize AI to tell them which funds to buy and sell. A lot of investors have been asking, from an AI perspective, how should they invest into it? For instance, if we look at S&P 500 and NASDAQ, a lot of the top 6 names are similar. They're Nvidia, Microsoft, Amazon, Apple. What are your thoughts on this when investors say, should they invest into AI, or should they just go with a standard generic NASDAQ 100 index?
Well, we do think AI is going to be very fertile ground. You do have to pick your spots. We're in a moment now where you're seeing a lot of companies slap an AI into their names, and this is where active management really is important.
Was that a shot at C3 AI? Isn't that ridiculous? Let's see what happened with C3 AI stock today. I think C3 AI sent Palantir down today, and which is so laughable. Like, anybody that knows anything about like the whole AI space knows that C3 AI is not the one. There it is. Oh gosh, let's see what happened here today. Yeah, C3 AI is down 13+%, and that's on a day when a whole lot's green out there. But from what I remember, I think it sent Palantir down today just in sympathy, which is ridiculous because C3 AI is not freaking Palantir. Like, come on, man. Come on. What are we doing here? Oh, gosh. But, hey, that's what makes a market, man. That's what makes a market.
I think that there will be very many successors, but successful companies, but the most important ones we think are going to have visionary management. I mentioned Tesla as an example, visionary management, AI and domain expertise. That should be a given. But perhaps the most important after those is large pools of high quality data that no one else has. So proprietary data. We mentioned with Tesla, it has billions upon billions of miles of real world driving data so that it is evolving a system that will help people get from point A to point B in the quickest way and the safest way. That's really important, the safest way possible. And, we can look into whether it's our genomics names with Exact Sciences and Teladoc. Genomics, I call them multiomics as well. They have data that no one else has. Twilio has data in terms of the interactions between businesses and consumers that no one else has. Zoom is going to be announcing new products, I think, in early June, showcasing some of its AI products based on data. UiPath, again, in the robotics process automation space, this is a company that is advising companies now with their own large language models, advising them, how do we make you more productive over time with new business processes? We believe that, right now, our estimate is that there are $32 trillion globally paid to knowledge workers, and that is where we're going to see a lot of productivity gains. We may see displacement of some workers, but we actually believe that technology is
Is it just me, or did she not even mention Palantir?
net job creator, and that those people will go on to better jobs.
So I think if we look at AI, Goldman Sachs came out with a report that said they expect that the AI space will reach roughly $7 trillion in global economic growth. But given that we are in Asia, we'd like to know your thoughts on China, tech. What can you share with us, and what can we expect to come?
Well, I have known for many years. In fact, I sat on a panel at the World Economic Forum it was either 2017 or 18, with the Minister of Innovation from China. China has had innovation as one of its priorities for a very long time. And
there's no doubt China is phenomenal at innovating. I mean, they innovate by stealing our stuff better than anybody else. Come on, man.
And we think that's the right thing to do. We know that common prosperity suggests to us two things. One, maybe profitability is not going to be as much rewarded in China, but the vast market in terms of, tier 2, tier 3, 4, and other tier cities will open up innovation and make many people's lives much better. So we think what you give up in margin, you might get in scale in China. But we do think it's very important that companies understand when they move into China, if they want that scale, opportunity they'll probably have to give up on margin in keeping with common prosperity.
Exactly. Do you expect technology and AI to evolve as fast in China as in the West, given, of course, some of the restrictions around in the country?
I think this might be one reason Elon Musk and others are there. They don't want to shut the country down, or they don't want China to be isolated, that the give and take has helped us for the last 20 to 25 years.
Fair.
So we're hoping that the restrictions do not impede innovation. I don't think that at the end of the day that the Xi Jinping administration wants isolationism to limit innovation. My experience in China and talking to people from China is they want to encourage innovation, but they want to make sure that it presents access, gives access to as many people as possible in the country.
Kathy, finally, for how long will the promise around tech, around artificial intelligence, be able to offset the reality of higher interest rates, also the pressure on the broader economy?
Yeah, as we always say, innovation solves problems, and AI, we believe, is going to cause a productivity boom. So to the extent that companies who are having to pay higher interest rates on their increasing debt need to find ways to save costs, they're going to look for technology to help solve their problems. And we think it will. And we also think, this is really important, we also think that AI is highly deflationary in the good sense. AI training costs are dropping 70% per year. That's massive deflation taking place, but it will cause a boom in activity associated with artificial intelligence. So we believe that companies are going to adopt it. We think that ChatGPT was that moment, and we're thrilled that it happened because finally people are looking at the promise of innovation instead of, over the last 2 years, worried about companies investing in innovation. So we think this is going to be a win-win. And by the way, if we're right on the deflationary ramifications of innovation here, then interest rates are going to come down, which will be a double benefit for innovation-based strategies.
Yeah. You know, I appreciate your thoughts there on several different subjects, obviously, and I didn't have a ton of input there. It is a little frustrating, she talks about all these AI related companies and to not really give, Palantir some airtime there, right? When you really have that opportunity and you could go in depth on, what Palantir's doing and, why their product's a game changer and why, all these Fortune 500 companies are going to have to consider signing up for Palantir over this, next few years. I just think that was a great opportunity, and to just talk about some of those other stocks she talked about. I'm just like, what are you doing, man? And so, as always, leave a little bit frustrated with Miss Kathy Wood. But I appreciate you guys joining me as always. Thanks so much for being here. 27,700 plus subscribers on the channel. And also, if you're looking to apply for my private group, check out the pinned comment down there. That'll be for an application. Much love and have a great day.